Hi. Today, the Indian stock markets navigated through a day of mixed sentiment, closing with small gains after a four-session rally. Investors appeared to take a breather, reassessing their positions amidst global and domestic developments that continue to shape market dynamics. Let's explore the performance of the markets today, delve into the factors influencing this movement, and analyze the broader implications. Starting with the major indices, the BSE Sensex closed at 80,905.30, marking a modest gain of 102.44 points, or 0.13%. The Nifty 50 fared slightly better, closing at 24,770.20, with an increase of 71.35 points, or 0.29%. However, the Nifty Bank Index, which is crucial for gauging the health of the banking sector, declined by 117.60 points, or 0.23%, closing at 50,685.55. The trading activity among institutional investors today highlighted an ongoing trend. Domestic institutional investors, DIIs, remained net buyers in the cash segment, infusing 3,097.45 Indian rupees crores into the market. This steady inflow from DIIs reflects their confidence in the Indian markets, despite the challenges and uncertainties that lie ahead. On the other hand, foreign institutional investors, FIs, or foreign portfolio investors, FPIs, continued their selling streak, pulling out 799.74 Indian rupees crores. The persistent selling by FIs underscores their cautious approach, possibly driven by global uncertainties and concerns about the Indian market's short-term outlook. The market opened flat today as investors paused after a four-session-long rally. This breather was expected, as analysts had anticipated traders would likely buy the dip throughout the day. However, broader Indian benchmarks remained muted, reflecting a day of cautious trading. This sentiment was echoed across other Asian markets, which also took a pause after a recent rally. Investors globally are now awaiting the minutes of the latest U.S. Federal Reserve policy meeting and Fed Chair Jerome Powell's address later this week. These events are expected to provide crucial insights into the trajectory of future interest rate cuts, a key factor influencing global markets. In the meantime, Indian banks face their own set of challenges. The governor of the Reserve Bank of India, RBI, highlighted the need for banks to carefully monitor the gap between credit and deposit growth. A widening gap could potentially lead to a structural liquidity issue, posing risks to the banking sector's stability. This warning from the RBI comes at a time when the financial sector is already under scrutiny, especially given the recent outflows witnessed by India's financial services companies. Data from the National Securities Depository Ltd, NSDL, revealed that India's financial services sector saw outflows worth 147.90 billion rupees, $1.8 billion, in the first half of August. This marks the highest outflow since the second half of January and accounts for about 79% of the total outflows. These outflows are concerning, as they indicate a lack of investor confidence in the financial services sector, possibly driven by concerns over liquidity, asset quality, or broader economic challenges. Despite these outflows from the financial sector, consumer stocks managed to attract inflows, supported by a normal monsoon. The agricultural sector plays a crucial role in the Indian economy, and a normal monsoon generally bodes well for rural income and consumer demand. This positive sentiment towards consumer stocks helped the broader market end the day with small gains, even as other sectors struggled. The day's trading session saw 6 out of the 13 major domestic sectors logging losses. The highest-weighted financials fell by 0.15%, while the banking sector shed 0.23%. The decline in these sectors weighed on the benchmark indexes, offsetting gains in other areas, particularly consumer stocks. The financial and banking sectors are pivotal to the overall market performance, given their significant weightage and their role as indicators of economic health. Today's decline in these sectors reflects the ongoing concerns over liquidity, credit growth, and the broader economic environment. Consumer stocks, on the other hand, provided some much-needed support to the markets. The inflows into this sector were bolstered by expectations of a normal monsoon, which is likely to boost rural incomes and drive consumer demand. The resilience of consumer stocks amidst broader market challenges highlights the sector's importance in the Indian economy. As a key driver of growth, the performance of consumer stocks is closely tied to domestic economic conditions, particularly in rural areas. Globally, markets are in a wait-and-watch mode, with investors closely monitoring developments in the U.S. The upcoming release of the minutes from the U.S. Federal Reserve's latest policy meeting, along with Fed Chair Jerome Powell's speech, will be critical in shaping market expectations around interest rates. Any indications of a more dovish stance by the Fed could provide a boost to global markets, including India, by easing concerns over tightening monetary policy and its impact on economic growth. As we look ahead, the Indian markets will continue to be influenced by a combination of global and domestic factors. The ongoing liquidity concerns in the banking sector, coupled with the outflows from financial services companies, will require close monitoring. The RBI's warning about the potential structural liquidity issue underscores the need for caution in the financial sector, particularly as banks navigate the challenges of balancing credit growth with deposit mobilization. On the domestic front, the performance of consumer stocks will remain a key focus area. A normal monsoon could provide a significant boost to rural demand, supporting the broader economy and helping offset some of the challenges faced by other sectors. Additionally, corporate earnings, economic data, and policy developments will play a crucial role in shaping market sentiment in the coming weeks. In conclusion, today's market performance reflects a cautious and mixed sentiment, with gains in consumer stocks offsetting losses in the financial and banking sectors. The ongoing outflows from the financial services sector, coupled with concerns over liquidity, highlight the challenges facing the Indian economy. However, the resilience of consumer stocks and the steady inflows from DIIs indicate a level of underlying confidence in the market's long-term prospects. As global markets await crucial signals from the U.S. Federal Reserve, it is essential for investors to remain vigilant and stay informed. The interplay between domestic challenges and global developments will continue to shape the market landscape, requiring a balanced and strategic approach to investing. This video is made for educational purposes only. Please don't make any investment decisions based on it. Please like, share, and subscribe. Thank you.